Own a limited company? Well, I've got some bad news for you. As business accountants, my team and I spend all day long helping business owners on their journey. And of course, one of the key areas we talk about a lot is paying yourself. And quite normally in the UK for owner-managed business, so we're talking about limited companies in this video, if you're the director, quite often you're the shareholder as well when you start a company, and you tend to pay yourself in general terms, and like everything in these videos, they're all general, usually, that kind of thing. In the usual kind of manner, you would pay yourself a small amount of salary, and then the rest of it tends to come out in profits as dividends, and the reason that is you get a pretty effective tax rate across it all. Basically, it's cheaper to do it that way. So most people end up paying themselves like this. Now, the issue with that, of course, is that there are two various taxes going on. You've got the corporation tax, the company tax, and then when you withdraw the money, you've got this dividend tax. And there's plenty of videos on the channel talking about that in other detail, so check those out if you want to go into any detail. But there is some news in this video that I want to talk to you about which isn't particularly good. Because let's face it, any rise in tax is not going to be good news for you as the business owner, and that's what I've got to tell you. The dividend tax is going up. But before I get into the detail of any of that, if you like these type of videos, make sure to click the subscribe button and the bell below so you get notified whenever we release more videos just like this one. So the rates are moving. At the minute, quick recap for you. Normally, as an individual in the UK, your first £2,000 of dividends are tax-free. At the time of recording the video, that's an allowance that's available. And then if you're in what they call the basic rate of tax, so you're earning total income under around 50,000 a year, then you tend to pay 7.5% on your dividends. Now, all of the rates have gone up 1.25%. So they're all going up 1.25% from next April. And the way that's going to work is so your 7.5% is now 8.75%. When you start getting over that kind of 50k-ish mark, you end up normally at 32.5%. That's now gone to 33.75%. And then if you're really lucky and you're earning over the 150k, then you're looking at 39.35%. So it's pretty chunky values. And again, any rise is a rise, isn't it? So unfortunately, that's where we are. Quick mention, if you do have a loan, I don't want to get too much into it in this video, but if you do have a loan that's overdrawn with your company, so you've taken a lot of money, you haven't repaid it within 9 months of the year end, generally there's a tax bill associated with that. That also goes up in line, so you'll end up paying that 33.75% rate if that's you, and if you'll know what I'm talking about if that's you. So that again is another hit to you. So there is that. And of course, this is thrown in a year where we've got the living wage has moved up. So that's gone up to £9.50 an hour, or will go up to £9.50 an hour for those at 23 and over. So that's going to cost the business money. You're then presumably going to have to bump people above that rate up to keep the nice distance between, let's say someone on £10 and someone on £9 previously, and they're £9.50. You might want to now make them £10.50. I don't know. You've got to look at it, haven't you? That can add more cost. And of course, with this dividend tax rise, they're also bringing in a 1.25% increase on employers' national insurance. So you as a business owner employing people are also going to have this hit. And on top of that, you've then got in the future years coming, we've got a corporation tax rise, so your business tax rise going from 19 to 25% up to. A lot of small businesses are still going to pay towards the 19% or even just the 19% with the way the system works, and that's for another video. But know that those rates are rising. So that's quite a lot of hits to the small business world in the coming years. And of course, a lot of it's being mentioned, well, look, it's the fact it's the effect of the pandemic, we've got to do something. And that's where we're at. Action points to take away for this video then. Please go and look at your pricing. I think as small business owners, that's the thing you must be doing when we hit the new year. You might want to start thinking about it now, but look at your pricing. You're going to have to react because it's likely if you've got staff and you've got other costs, you're going to see other people doing the same as well. And you're going to have a look and see, do I need to change my pricing? How can I add value to my clients and customers and the product? What can I do to move those things around and, get those prices up? Because otherwise you could end up in a situation where it's just not, your business just isn't sustainable. The model doesn't work anymore, especially if you're one of these models that, runs a very small profit margin on your products. Then these things are going to really impact you. So check your pricing, that's a big one, and just check how this is going to affect your business. Please do share this with anybody you think needs to know this information, and I'll see you in the next one.